Welcome, everyone, to my weekly Monday night episode on Best of Us Invest. My name is Jacob Braun. I'm a writer for Seeking Alpha and the founder of Braun Capital. Today, we're going to talk about the research process behind finding winning stocks. And with that topic, we're going to actually have a special guest, Justin from Cappuccino Finance. You may have seen him as he's a writer on Seeking Alpha, and he also has a YouTube channel of his own. So this is a topic that I think many people want to learn more about. People hear about, someone tells them a tip about a stock. Someone wants to be able to find their next stock because they have some free cash, and they want to know the process of going about that. So in this video, I'm going to talk to Justin, and I myself am going to kind of give you some tips on like how we research and go about finding a company. Before that, I just want to say, if you want to stay up to date on everything I'm doing, check out my Twitter at RealJacobBraun. After this, we're going to go to the segment with Justin. And then after that, I'm going to use stockcard.io. And we're going to go over and look specifically into how we can research these companies. With that being said, I'm going to jump over to my segment with Justin. Welcome, Justin. Thank you for coming on. So today we're going to be talking, like I said earlier, a little bit about just the process of how you find your stocks. So let's say you don't have any idea in mind and you say, I need to find some companies to look into, what's your first step you do?
Yeah, so typically what I first to do is using the screener. So it could be the Finviz or the Yahoo Finance. There is a screener you can run. So there's a couple of different, let's say, fundamental that I put it onto my screener, like a profitability. Like I certainly look at let's say if you look at the tech stock, I look at what is the median, like a profitability of the tech sector, and then enter the profitability above the kind of sector that I'm looking for. And then also I'm looking at the current ratio and then a quick ratio, like making sure the company have enough cash to cover their expenses, and then like liquidity is high, and also making sure that their balance sheet is strong. So those are I enter those metric then looking into the screener, and then like try to reduce the list down to about like 10 to 15. That's kind of first thing usually I do.
So when you find a company, let's say someone, I think you probably get this a lot. I get this all the time. Someone tells you a company like, "Hey, like I really like this company. Can you look into it?" What's something when you see it that you're like, that's an instant red flag? Like, so you see it, and you're like, I can tell real quickly that's not a company I want to be a part of.
Yeah. So probably the one of the thing that the first red flag is like I look at their like cash flow, operating cash flow, and then if it shows the like kind of like a huge negative number, and also more importantly, the trend is going more and more and negative, then that's kind of something that I don't really like even start looking at it. Just like, oh, okay, I don't think this is a good company. Yeah.
For sure. Yeah. And so let's say the same situation. Let's say someone tells you a company, you do a little background research. What's something that if you see a very strong number in like a category which piques your interest?
Yeah, so I kind of touched on like on the screener side a little bit. So when I look at their like profit margin, it could be like operating margin or it could be like net income margin. If I see their income margin, like the profit margin is much larger than let's say sector median or peers, I can instantly know, oh, this company is doing things much better than others and also have like sustainable edge. So kind of in my mind, the strong profitability give me the cue that this company has an economic moat. So that's kind of something that I like very appreciate.
That's good. So another thing is you mentioned like looking at different sectors, such as the tech sector. Is there a specific tech a sector you prefer because of your own background, or you think that it's one of the better sectors, or do you kind of rotate based on what's hot and what's not hot?
Yeah, so I think so for some reason, using the screener and find it. It turned out to be a lot of sector I love is the industrial sector, something like a waste management or the like Home Depot. Or I guess Home Depot is more like a consumer staple, but or something like a railroad company. I prefer those company because they provide kind of essential service to like us and to the kind of U.S. economy, and we know that as long as U.S. economy is going well or like growing, we generate more like a trash, and the waste management company will grow. And also obviously railroad company, that will grow. So I think that that's kind of my preference by something, the company that I'm looking for. So
I think another question I want to ask: do you typically prefer looking at growth companies or more dividend companies?
yeah, that's a very tough question. I think that's a little bit depends on the market cycle. I think
Okay.
so. When in the bull market, when I'm expecting the company to grow, then I typically focus more on the growth company. And whereas company like right now, like their market's a little bit volatile, and then I want to be kind of park my money to kind of stable and then collect the dividend. So I think that's going to be a little bit depends on like market cycle. So
Yeah, I think that's a very good background there on some just different tools. Do you have any other things you would like to say about, tips you would say on finding companies or looking into a company?
yeah, so one thing that after I kind of let's say reduce my interest list with the what's it called, the screener, I always go to the sec.gov and then read their annual report very
Mm,
carefully. So annual report have a great information about company, like how they're doing, like business definition, how companies are structured, like a segment. And then a lot of time, the management keep a very detailed explanation about how each segments are growing and why do they think are growing. So I think investor during the due diligence, I think it's a great idea to read through their annual report and then pick up a lot of very important, like very high quality information about the company. I think that's investors should do.
yeah, I agree. And another thing is a lot of companies have investor relations pages, which
Yeah.
will have, those annual reports and even sometimes corporate presentations. And while a corporate presentation is always going to be kind of sh- prettied up for the
Yeah.
investor. It definitely can, when you're first looking at a company, it can definitely give you a great glance at the company.
Yeah.
Um, with that, Justin, where can we find you?
Yeah, so you can find me my blog at cappuccinofinance.com. And also, I have a YouTube channel with the same name, the Cappuccino Finance. So you guys should check it out.
Yeah, thank you so much for coming on and giving everyone a little bit more insight into that.
Yeah, it's always my pleasure. Thank you for the invitation.
Everybody, now I'm going to show you a tool called stockcard.io. If you like what you see, use the code best of us just to let them know we sent you if you end up getting a subscription. I'm going to share my screen and we're going to get started um, right here. So this tool is a great tool. It uses AI and it has a great stock search feature. There are other stock search features out there, but I really like StockCard.io because it's very easy to use and it gives you a good breakdown of what you're looking for. So I'm going to go here, Stock Screener. We're going to look at a company that has um, a positive. Oh, I need to start a new screen. We're gonna look at a company that is, a small cap company because they don't have a lot of room for growth. It has good growth potential, and not just with good growth potential. We're gonna buy and hold because we want this to be a solid company. We want a strong operations, so it's a consistent company, strong sales, and a solid cash and profitability. So this is a company that's done performed very well, small to mid, and has good growth potential. But is very in a very good financial shape. We can also look into dividends. Typically, a company in this stage that's growing this much probably won't pay that much of a dividend, so I'm not going to deal too much with it. Um, and we can also deal with technical stuff, but we're not going to look that. We're going to apply this, and we're going to get a list generated by stockcard.io of all these companies that fit this criteria. So I'm just gonna do one of them just to show you. So let's take the top one of that list. Halsey's Automation Technologies. Um, we're gonna click it. We're gonna view it, and we're gonna look at it. So this gives us a good broad level overview. So investors are calm, strong operations, high growth. It has underperformed the market recently. So, but what that means is that it has potential, potentially to outperform in the future because things are typically very cyclical. It's a buy and hold stock. It's relatively fairly priced as considered. Right now, there's no analyst coverage, so that's something that's very interesting. If we look at this chart, we got a 1 month chart here. Oh, great performance over the last month. And over the past 1 year, pretty solid. Over the past 5 years, relatively flat. we're in the middle of analyst targets here, and middle of our 52-week range. So this looks like a solid company that I'd be interested in buying. Um, let's look here at some of the stats of the company. So it looks like it doesn't make profit. You have a solid 1.88%, or sorry, we have a solid 1.88% yield, a PS ratio of 1.77, free cash flow of 61 million, earnings per share of 1.48. So they do make a profit, market cap of 1 billion. So this is a solid company to look into. So after I do this, I look at some more of the numbers. I find the industry. So we're in electrical equipment and parts, definitely a hot industry, expected to grow 16%. It's in the automation. You look at some of the other things, the profitability companies had good earnings per share. And I'll continue to look into more and more of the tools that StockCard.io pulls up for me. And that gives me a good broad level overview of the company. Now, after I do that, I'm going to go typically to the SEC.gov site to look at the 10K report, because the 10K report, as Justin was saying, gives a lot of great information. So, sees automation. So now this 10K, we're going to come here and we're going to pull up the 10K, and the 10K is going to give us a lot of great information about the company that's much more in depth. They have a lot of reports, it appears. So we're going to find that 10K. Once where there's other, you can search through it too. So let's do this. Let's find 10K. Search text and documents. Okay, so we're gonna find a 10. Okay, that did not work. But one of these is gonna be a 10K. I'm most likely missing it. And what you can do is you can click it, download it. We don't have time to go all through it. There's many great resources on how to look through a 10K, but overall, a 10K just is a full breakdown of it's an annual report. So it gives you a breakdown of everything about the company for that year. And these are really good to read, and you should probably read at least that year's and probably one or 2 years more going back, just to give you a solid background on the company. Now, after I do that, after I use StockCard to kind of find companies, and then I screen through a few of them, after I dive into the companies itself, and then look at the 10K, look at the numbers myself, the earnings, whatnot. Then after that, all that, then I'm gonna typically read some analyst opinions. And how I typically do that is I'll go to Seeking Alpha and find look up the stock and then read some opinions on it. So I hope this video was helpful, just to give you the base background information on just how to look up a company, because I'm sure we all see someone recommend one on a message board or message us about a company, and we want to know how we can look into that company. And so I think this process of, once we hear about the company, we go through a screener. If we already know it, we don't need to use the screener step probably. But once we hear about a company, we look at the 10K, we look at those key metrics as seen on StockCard.io. And we look then into potentially some analyst reports on it on a site like Seeking Alpha. We can really get good information to be able to form our own opinion and decide if this is an investment we want to make or not. Again, everyone has their own methodologies, but I think all center around some form similar to this on the base steps, about just looking at the base numbers and then going from there to find more information. Thank you for watching this video. If you enjoyed it, like it, comment, subscribe, and I hope you have a good day, and check out my next video next Monday.